All right, so I did it, guys. I went all in. So if you recall, a couple of videos ago, I gave you my game plan for how I plan to invest over the next 2 weeks going into the FOMC meeting with Jerome Powell. And I mentioned that I had about 23% cash on the sideline, and my plan was to deplete the entire amount into the markets. So I have depleted most of that. I still have about 5% of cash on the side just in case the market goes really wild. But apart from that, the rest is pretty much all in the markets. And I did do a ton of buying. So I'm going to share with you what I was buying pretty much over the last 2 weeks. I'm not going to do a deep dive into all of them because it will be too long of a video, but I'll share my reasons for some of the purchases as we go along. But the rest will pretty much be how many I bought and at what price. Okay, so with that said, let's just dive straight into it. So the first one, as you can see here on Stock Unlock, it's Facebook or Meta Platforms Inc. Okay, so I ended up picking another 27 more shares, which brings my total position to 50 shares in Facebook at an average price of $326. Now, the reasons behind why I decided to pick up more Facebook shares and pretty much finish my position at this average, I shared it here with my Discord. Okay, so the fundamentals changed drastically, and let me explain to you what I mean. I said, hey guys, I read through and annotated Facebook's Meta Q3 earnings. Cool, should be cool there. A few weeks ago, before I decided to invest in the company on a recent pullback. Please see attached. However, a major obstacle the company faced and highlighted in the earnings call was the damaging impact Apple's iOS privacy change had on their Q3 performance. Okay, and let me show you what I mean. So in the call here, Mark Zuckerberg says, right, as expected, we did experience revenue headwinds this quarter, including from Apple's changes that are not only negatively affecting our business, but millions of small businesses, what is already a difficult time for them and the economy. Okay, so the advertising revenue did see a decline as a direct result of Apple's policy change. And if you go on hypercharts, you can see it did decline from Q2 to Q3. I mean, year over year, don't get me wrong, they still smashed it. But in terms of the continued growth trajectory, it did pull back from Q2 to Q1. So that was a significant impact on the business model. However, like I said, the fundamentals changed, okay? I go on to say that this was a concern I felt Facebook had the necessary means to navigate through, and management also outlined a plan in the call which involved a bigger effort to push their commerce platform, okay? And that was here. I'm not sure if you can see this, but this was my annotation and my notes there. So essentially, they said they're going to be pushing their own commerce platform to try and boost advertising revenue once again. However, it was still a major risk that could result in disappointing quarterly results in the short term, and as such, I decided to limit my investment capital. But this has now all changed because Apple have secretly reached a truce, which will allow platforms like Facebook to resume with their targeted ads without abstracting personal user data. And I shared the link with my Discord here. However, here are the main points from that article. So it was a recent article on December 8th. Apple reached a quiet truce over iPhone privacy changes. And what they pretty much said is Apple has allowed app developers like Facebook to collect data from its 1 billion iPhone users for targeted advertising. So pretty much everything Apple did, how they were flexing on us and showing that they really care for us, really and truly, they've kind of doubled back on it, because if you look at it, it's not only going to affect Facebook's revenue, but it's also going to impact Apple's revenue. And that's exactly what's already starting to happen with Apple. If you take a look at Apple's Q1, Q2, Q3, and Q4 earnings, Apple's revenue has been in a decline since Q1. All right. So their privacy change is affecting their business as well as other businesses like Facebook, okay? So as a result, they decided to reach a truce because, look, Apple needs to start growing their revenue again. It's all well and good them trying to paint themselves in a moral light, but the reality is Apple's revenue is in decline, so they had to come to a truce, okay? In an unacknowledged shift, man, I tell you what, that took me like 4 attempts to get that right. So in an unacknowledged shift, lets companies follow a much looser interpretation of its controversial privacy policy. But 7 months later, companies including Snap and Facebook have been allowed to keep sharing user level signals from iPhones as long as the data is anonymized and aggregated rather than tied to specific user profiles. And this is the main difference between how it used to be done versus how it will be done now. So essentially, they will anonymize our personal information, but they will still have access to stuff like my gender, my age group, for them to be able to target the ads to me specifically, so like my interests. However, companies like Facebook or Snapchat won't be able to get my name, so my own personal details essentially. And I think that's good for both parties. And you have a statement here from Sheryl Sandberg, who said that, that the social media group was engaged in a multi-year effort to rebuild ad infrastructure or anonymized data. Okay, so this was a truce that was reached between Apple and other app developers. I think it's going to be in the interest of both parties. Apple's going to win because they're going to start to see revenue climb back up higher. Facebook also is going to win, and I think us as consumers are also going to win because they will not be monetizing my personal data to some extent. So it seems like a win-win for all parties involved, and that's why I decided to load up on Facebook. So next was Airbnb. Okay, so ticker symbol was ABNB, and Airbnb had just been absolutely battered since earnings. The new issues going on with the C-Roni is now causing multiple countries to lock down. Travel restrictions are back in place again, and companies like Airbnb, Booking.com, all of these travel type stocks, even the cruise lines, have been battered and bruised. So I've just been nibbling, and I picked up only 10 more shares of Airbnb. So I picked up 10 more shares of Airbnb. I just helped myself while there's still pessimism in the stock, because yes, although this is impacting Airbnb stock in the short term, I think in the long term, especially as we begin to learn to live with these new variants that pop up here and there, I think Airbnb will continue to thrive, and that's why I decided to just strengthen my position with 10 more shares. Now I picked up an additional 200 shares of HIMS. Yes, I know I said I've finished buying HIMS, and I thought I'd finished buying HIMS, but it just got really dirt cheap, and it's continued to get really dirt cheap, to be honest. But that wasn't the reason why I purchased more. The reason why I purchased more was because Andrew Dudum, the CEO, also purchased more shares recently. So Andrew Dudum picked up 81,100 shares for a price of $5.92. So that pretty much got me excited because, Peter Lynch says, that insiders can sell for a number of reasons. But when insiders buy, it's because of one reason only, and that's because they believe the share price will go up. So it was incredibly reassuring to see Andrew Dudum pick up quite a significant amount of shares, and I decided in celebration, I'm going to honor that and add 200 more shares to my position. And that's what I did. All right. Now, next up was Opendoor. Ticker symbol is OPEN. I picked up an additional, in total, 350 shares. So Opendoor, I already started adding to that position 2 weeks ago, and then last week, and then this week, right before the Fed's meeting, I added another 100 shares. So a total of 350 shares over the past 2 weeks. And the average of all of those purchases was about $13.55. And yeah, it just strengthened my position. And the reason why I added to this position even more was because our director added more shares recently, and I believe I've shared this already in another video. But it's just really reassuring to see that the insiders of my highest conviction plays are pretty much buying and taking advantage of these weaknesses. And that's exactly what I did. So I picked up 350 more shares of Opendoor. Now, next up was BigC. I picked up 50 more shares of BigC, and I've got my total position to 350 shares of BigC. Now, this is a position that I plan to do a full in-depth video on. I've compiled my research notes on BigC. It's about 6 pages long that I've shared with my Discord. They have access to all of that. So at some point, I will do a deep dive in BigC. But until then, if you want access to that, you need to join my Discord group, and the Patreon link is in the description below to have access to my full research. But with that said, I picked up another 35 more shares as pessimism continues to hammer this stock down. I mean, if you zoom out further, you can see the stock has dropped from its peak at 141, I believe, $141, and it's now trading at $36. However, the financials and the fundamentals have gone up and to the right. This is a company that I see has similar circumstances to Opendoor, HIMS, where the business is doing well, but the stock is doing poorly. So I added to that position. Now I picked up another 300 more shares of Offerpad. Ticker symbol is OPAD. Up 8% at market close on Friday. Again, I see this position as a baby brother to Opendoor. They are the only main competitor left to Opendoor in the iBuying space. But the good thing about Offerpad is that they have much better margins in comparison to Opendoor. And it's because the CEO of Offerpad has decided to scale but scale at a snail's pace, okay? So he's not trying to expand into as many markets as possible as Eric Wu is doing. He's taking his time with the current markets that they're in, and they're expanding very, very slowly. And I do like that, you know, and it's helped margins because this company, I believe, will have a very strong Q4 and Q1 and also many quarters to come. But I'm extremely looking forward to Q4. It should be very interesting. So Opad, I added another 300 more shares of Opad. Now, next, I added another 100 more shares of Corsair Gaming. Okay, ticker symbol is CRSR. This is one of Jeremy from Financial Education's biggest pick of the year. Either his largest or second largest position in his portfolio, especially from this year. I think it's second to Tattooed Chef. But either way, I think this company is ridiculously undervalued. It's been absolutely destroyed throughout pretty much the whole of this year. And I think the valuations and where it's trading at currently, I think the risk versus reward at these valuations favors the reward side. Now, I mean, don't get me wrong, there is still potential downside at the stock, but it's already trading at a price to sales ratio of 1. I mean, any lower, the price to sales is going to head into the negative territory. And in one of my previous videos, I told you that the main reason why stock is being beaten down is because of supply chain issues, especially at the ports. And I also revealed in the previous video that the supply chains at the ports especially are improving. So I felt it was the right time to start a position in Corsair. Don't get me wrong, it's less than 3% of my growth portfolio, but I feel like, you know what, there's a ton of upside in this stock. It's not one of my highest, it's nowhere near one of my highest conviction investments, but I still allocated about 2% of my growth portfolio to the stock. And lastly, I picked up more Celsius. So over the past 3 weeks, I've added another 45 more shares of Celsius, and my average price with all of the purchases is $63. Let me quickly pull up the Celsius chart right here. And again, we had quite a solid run during Friday's trading session, up 6% on the day. But again, the stock has been beaten down all month. I mean, it reached its all-time highs at $110 right at Q3 earnings. And I mean, it's traded as low as $61 since then. So pretty much lost about 50% off its Q3 earnings, despite growing their top line by over 150%. So for me, it's an opportunity to load the boat. I'm bullish on this company long term. It's one of my highest conviction plays, and that's why I decided to add to Celsius. So that pretty much wraps up all of my buys. Like I said, I am all in now. Pretty much I have 5% left just in case the market goes crazy, but I do not intend to touch that 5% that I have left in cash. I'm going to leave that for emergency purposes only. And by emergency, I mean maybe there's something unforeseen that causes the main index to drop 15-20%. Then I've still got a little bit of dry powder to, you know, take advantage of any weakness that we see in these positions. But that's pretty much it. So I am officially all in. Let me know what you picked up over the past couple of weeks. And with that said, if you gain any value, please make sure you smash that like button. If you're new to the channel, hit the subscribe button and the notification bell to stay up to date with all of my latest videos. If you want access to all of my research notes, my buy and sell alerts, and also my rationale, my thinking, you need to join my Discord group, and the Patreon link to do that is in the description below. So with that said, I hope you guys have a fantastic weekend, and I'll see you in the next one. Peace.